There are two IPOs scheduled to go public on Wednesday. The first one is really much anticipated. It's Taylor Morrison, a home builder, and actually a pretty good home builder because I checked at their sites, their developments. One of them is completely sold out. They are mostly in California. So Francis, you seem to like this one. I was pretty impressed too because, like I said, California was ground zero for toxic mortgages, and yet they seem to be doing very well out there.
Right. They sell homes in the range of 150 to $1 million, so it's a little bit wider range than some of the other home builders. And it's raised quite a bit of private equity money and debt money, so it's going at a good clip. Just a couple things to note is the control is based in the Cayman Islands, which I never like. That means that the controlling stockholders don't want to be accountable, and they can't be held accountable. The other kind of thing I'm not crazy about is 60% of the IPO proceeds are going back to shareholders. On the plus side, it's a very good company. It's coming at a PE discount relative to the group. There's about 5 other home builders that we follow. And I noticed that the institutions kind of own that segment. In other words, if they own one stock, they own all stocks. So as you said earlier, this is going to become basically an instant institutional stock. The way I calculated it, if you look at the 2012 figures, earnings, and put it into the price, it's coming at about 18 times earnings, which is really low. That's a discount. They're also coming at a price to tangible book value discount. So the other thing that's positive is the home building sector is up about 22% so far this year. So it's always good to get an IPO that's going into a sector that's going up. And they're pricing it to sell, and they're leaving, I think, a little bit of money on the table, and that's very good for IPO investors.
Right, and I think, like I said, I think the institutions will like this because, as you noted, they do tend to get into these blocks, and most of the home builders have already moved, so this one is new and a new name for their portfolio. Then also going out on Wednesday is KNOT Offshore Partners, raising $150 million. What do you think about this one?
Well, it's a limited partnership. It's got 4 shuttle vessels in it that ferry back and forth between deep water drilling. But what they're doing is selling 43% on the IPO, which is a high percentage, especially since it's all going to pay debt. A couple things I don't like about that. They're paying, by the way, 7.5%. So I think the retail investors will probably buy it. I think excuse me, the institutional investors will stay away.
All right.
One of the reasons is they say that they have a modern fleet. One of the 4 ships was built in 2007. That's not modern. They say that they're focusing on 5-year charters. That ship has a charter that runs out in 2014 that can be extended to 2016. That's not a long-term charter. So there's an inconsistency in the S1 filing. Whenever you see that, you want to run.
Okay, well, it sounds like, Francis, you're not too wild about KNOT Partners, but Taylor Morrison definitely looks like a good one for investors this week in the IPO calendar.